We're in the back half of the session on this Friday, and markets are wobbling. According to reporting from MarketWatch, stocks are selling off, and the S&P 500 is now flirting with a weekly loss. So the tone right now is risk off, a bit of that classic end-of-week fatigue as traders lock in gains and reassess what the Fed's latest move really means. Since the last hour, the macro conversation has sharpened around that rate cut and what it's signaling. One key piece from MarketWatch asks bluntly, is the economy losing jobs, and did the Fed just tip its hand that it's more worried about the labor market than the headline data suggests? When the Fed eases but officials sound cautious on jobs, professionals start gaming out slower growth, weaker hiring, and what that means for corporate earnings in 2026. That's as an undercurrent to today's selling pressure. Layered on top of that, another MarketWatch story highlights that biotech, of all sectors, basically shrugged at the rate cut. The Fed cut rates. Biotech didn't notice. Instead of chasing cheaper money, many of these names are laser-focused on advancing science that might attract big pharma partnerships and M&A. For traders, that's a reminder. Not every corner of the market trades on macro headlines in the same way. High beta growth sectors that usually respond to rates can still move to their own drum if the fundamental story is deal-driven rather than rate-driven. On the consumer side, there's a fascinating split screen. Budgets are tight, but according to Claudia Aces at MarketWatch, Gen Z and millennial shoppers are still piling into perfume and beauty products. Fragrances are one of the fastest-growing categories into the holiday quarter. That kind of small luxury resilience is something pros watch in retail and consumer stocks. It can hint that while big-ticket spending might be slowing, the desire for affordable treats is still strong. It's a subtle signal that consumer behavior is rotating, not collapsing. Housing is another area drawing attention for strength beneath the surface. Arthi Swaminathan's reporting points out more home buyers are turning to FHA loans in an otherwise unaffordable market. Even with rate cuts, affordability is stretched, so buyers are hunting for alternative financing paths. At the same time, misperceptions about FHA can still create barriers. For investors watching home builders, mortgage lenders, and housing-related plays, this is a reminder that demand is there, but it's being channeled through more creative, and sometimes riskier, structures. That's an area of strength, but also one that needs to be handled with care. In the under-the-radar camp, one name on the screen this afternoon is Wealthfront. Tommy Kilgore at MarketWatch notes the stock stumbled right out of the gate in today's IPO, debuting into a quiet new-issue market on a day when the broader tape is selling off. Traders will be debating whether this is simply terrible timing or a sign that appetite for fintech and wealth management IPOs is still very selective. Early price action around fresh listings like this can set the tone for the broader IPO pipeline into the new year, so it's a name I'm watching in the background rather than a verdict on day one. There are also several personal finance and policy stories trending that don't move intraday prices directly, but they speak to the backdrop. Concerns that Affordable Care Act premiums could rise even more into 2027, lottery winner playbooks for handling a windfall, and retirement and savings anecdotes that highlight how regular households are navigating this environment. Together, they reinforce a theme. Costs are still high, pressure on consumers is real, and that keeps the focus on how long the Fed can thread the needle between supporting growth and fighting what's left of inflation. Heading into the next hour and into the close, I'll be watching whether this afternoon's sell-off deepens into something more than profit-taking, or if buyers step in to defend key levels into the weekend. Keep an eye on how rate-sensitive and economically sensitive groups trade relative to defensive names. That will tell you if this is just Friday fatigue or a shift in the market's growth outlook after the Fed's move and the latest jobs worries. I'm Grant Mercer, and this is Storm Stock Solutions. Remember, this is information and education, not personalized financial advice. As always, he'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.